Good afternoon, everybody. It's day before Thanksgiving. I'm here to do some market analysis. We've just recently yesterday, hit an all-time high on Dow Jones closing, 44,860. And SPY yesterday closed at $600 and change. And then the NASDAQ, or QQQ, closed at an all-time high a couple days ago, currently at 505. And I know everybody's wondering, well, what's going to happen next year? Do I need to get out of the market? Is it going to keep going up? Well, I'm not here to give you financial advice. I'm here to show you some simplified visuals and simplified charts, and you can make that decision yourself. Everybody's financial situation is different, but the more information you have, the easier it is to see it, the better decisions you can make. So currently we're looking at SPY, and this goes from, it's a long time chart. It's a yearly chart. It goes from 1996 all the way to today. And you can see currently SPY's at 598. It's the current price. This is November 27th. Almost 3 o'clock. So just to look at historical data, what you're seeing here is the price at the end of the year. So at the end of 2013, the price was approximately, within a few pennies, $182.79. In 2014, 199, 2015, about the same price. And then you can see it go up, and then there's a correction. So we had a year down between 17 and 18. SPY dropped from approximately 265 to approximately, because I'm looking at a year, so the resolution's kind of bad, to 246. So we're talking about $20. So the whole year went by and you basically didn't have any gain in SPY. And then the next year, which was 2018 at 2019, where you had a big jump, 20, 21. And don't you remember, 21, everything was going down. And then it stopped here, and then we had 2 years of gain. So what this chart is telling you, the next move on the yearly chart is going to be January 4th, 3rd or 4th, depending on what the first trading day is. So this chart is valid to that point, and then we need to see the next move. One thing I wanted to show you, if you stayed in the market since 2000 and let's see, 2010, you had positive gains from $140 to almost $600. So did you see any reason to get out? Well, there was a huge correction here and people got scared, but overall, this 4 simple moving average is going up from 2010, 11 to 2024. But look what happens between 2000 and 2012, 2011. Basically, for 12 years, the price of the S&P was flat. I've heard some predictions that could happen again. And we had a major correction in 2000 due to the dot-com bust. You know, the S&P at the end of the year was 99 was 146, and it went all the way down to 89. And then it came all the way up to 145 and went all the way down to 91. So this was a zigzag. You know, you made money, you lost money, you made money, you lost money. So you didn't actually go positive from the end of 99 until 2012. And it's been good ever since. So do you see any major changes happening. Well, not with this chart. You always have to look at the next move. We're going to zoom in a little bit. And what do we see here? We got the 4 simple moving average, which is aggregating 4 years average into one point. And this is the line, and you can see it was a correction where the 2 was going sideways. So the average price over 4 years was flat. Then we had 2 years of up. The thing you have to watch is we have this big space between the price of the stock and the 4 moving average, and we're starting to get that again. So until January, we're not going to know what's going to happen with this chart. So we're going to go and look at a quarter. Now we got a little more resolution. This is each quarter, so each 4 dots represents 1 year. And throughout the year, we can see the 2000 dot-com bust, and we can see the housing crisis here when the default swaps and the banks all went, how do you say it? They hit the bottom. And this has to do with the lack of liquidity for them to cover their positions with the investment products. They had to take liquidity out of the market. So huge drop, and you can see it happened over 1, 2, 3, 4, 5 quarters, and then it finally started going up. But this was a 12-year recovery for these 2 drops. If you notice, the 2 major drops were only caused due to mismanagement within the industry. I mean, .com, they were overvaluing companies tremendously, and here they were selling default swaps, which had no intrinsic value to them, and somebody woke up. The correction in 2022, 2023 was not due to any mismanagement of portfolios or stocks or misrepresentations. So this was more of a correction. So, I mean, looking at this, don't be surprised if there's a correction. Let's zoom in and see what we have here. So if we look at every quarter except for a couple of dips is sitting, the closing at the end of the quarter is sitting above the 4 simple moving average and around the 2, sometimes a little below, sometimes it's a little above. There's a correction back above, huge correction. What happened in 2020? We had COVID. So the correction, this line here is the 20 moving average. So it's the aggregate average of 20 quarters. So 2.5 years. And then we had this big push after COVID, and we had quarter up above the 2 simple moving average. We had a correction to the 2, and then we took off, and then we're above the 4, and then we had 2 quarters below the 2, and it corrected before the 20 again, and now we have the same movement. So until we have a down quarter, there's really nothing to indicate at this point in time that anything will change. There's a lot of pundits that are predictions, and that's all it is. So I like to watch what's happening to price over time, real time, and then we're going to go to shorter time frames where I can show you how you have more resolution. We're going to go to the month now, and looking at monthly now, we're kind of breaking it up a little bit. All right, so this is the month from 1999, and you can see the drop, and we've got more resolution. We see more of the jumps, and we're going to look at the relationship of more current data. All right, so during 2021, we had a huge growth in the S&P, and we had a little correction here. This is a month-to-month basis. So right here, was December 22, and now we're into January. So basically the 1st of January, we had this downtrend. S&P started at 474, and by September, October, it was down to 356. So it was around a 30% drop. But what did we see when we had this drop? The two simple moving average headed south, and the price was dropping until the two simple moving average changed direction. And then once it started pointing up, it's a buy situation. We had a correction. Let me show you this. We go up, 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 and then we have a correction in July for 4 months. And then we have up. We have a little correction here. But basically, between October of, I believe that's 2023, yep, all the way to current, the price is going up. No drop in the price whatsoever. And from the 1st January of 22, we had a drop all the way to October. So what is this telling you? Keep an eye on the months, keep an eye on the quarters. Don't do anything rash. You cannot predict the top, but you can tell when it turns around. What happens when it turns around? Here's a little turnaround here. It went from 456 to 418. But if you look at that on a quarterly chart, that's a monthly. Let's look at it on a quarterly. Boom. You don't even see it. It's not even a speed bump. So pay attention to quarters, monitor the months. Don't look at the daily price of stocks, because you'll go crazy and you'll probably do something you regret. But right now, the 4 SMA on the quarter is up. The 2 SMA is a quarter and up. All the prices are above the 4. And on the monthly, same thing. We're above the 4, and we're above the 2. We had a little correction here in October. We just have to be expecting a correction, but just monitor the 4 SMA on the monthly, the quarterly, and then we're also going to look at the weekly and see what the weekly is doing. And we got to zoom in. So the week, we got a lot of noise, but we're going to look at a closer chart. All right, so here we can see the corrections. So the weekly chart is a little more difficult to read, but what is the 4 doing? Which direction is it at? It does corrections, but it's always pointing up. And if we put a trend line to show these dips and corrections, which we'll use the SMA here, there's a correction right there. And there's a correction right there. There's a correction right there. So what is that telling you? Each correction is higher than the previous one. So expect a correction. But until you break the previous low, you're not going to have any turnaround of this weekly chart. Now, we have corrections here, but we didn't break the previous low. If you're in here long term, you do not want to sell off when you see the stock market drop 4 weeks, and then all of a sudden you miss this move. You had sold off at 534 and it hit 595. That's a good percentage in 3 months. So don't panic. Monitor the long-term charts. If you know how to work charts, get rid of the candles, just put a line for the price and look at the 2 SMA and the 4 SMA. And if they're going up, especially on the quarter and the month, you know the price hasn't changed. We have a little pullback here where you can see there was a correction on the 2, but the 4 is going sideways. The 4 is a stronger indicator, which would be 4 months, 1 quarter. And we could even change and look at the quarter again. Let me get that set up. And now we can see the quarters here. So, and you can see where these lines came back in. So the last pullback was right here at 569. So you can monitor that. If we break below it, talk to your investor, bank, your investment guy, and before you do anything, just you don't want to make those decisions and be out of the market. You know, talk to them about reducing risk, but don't even worry unless you break that point. You're going to see daily volatility, and that's not something that you need to pay attention to for long term. But market's still strong. The next big change would be next quarter or the first of the year, because things happen when the year changes. But right now, everything looks good. Monitor your long-term charts. You don't want to be stuck losing money for 12 years if we have another repeat of 2000 or 2012. If you don't know what you're looking at, get financial advice. This is not financial advice. This is how to monitor what is happening real time. Because most people look at charts that have candles, and we can show you what that looks like if you're new to this. And that is harder to understand. Simple is better for understanding what's happening long term. And the only thing that matters is what's the price when the stock closes at the end of the year, the end of the quarter, the end of the month. You guys have a good holiday. Talk to you next time.